All right, we are at the top of the hour, so let's get started. Hello and welcome to today's webinar, B2B and B2C online sales trends and tax implications. Thank you so much for taking the time to be with us today. I'm Jen Kijek, and I'm the Director of E-commerce Strategic Alliances at Avalera, and I've spent the majority of my career in e-commerce, so I'm really excited about the content and insights we're going to be sharing with you today. And who better to deliver these insights than Michelle Grant? Michelle is the Senior Manager, Strategy and Insights, Retail and Consumer Goods at Salesforce, and Kael Kelly, Avalera's General Manager of Compliance Documents. And of course, no webinar is complete without a safe harbor statement. And Salesforce and Avalera advise you to make purchases based on products that exist today. If you have any questions during the presentation, just pop them into the question box and we'll answer your question at the end of the session. And if you miss anything, don't worry. We're going to send you the on-demand recording once it's available. So we have a lot to unpack today, so let me turn it over to Michelle and Kael to go through our agenda.
Great, thank you so much. I'm delighted to be here, and today we're going to be covering a lot of ground. First up, we're going to be talking about business to consumer commerce trends and the tax implications of that. So I'll start off by talking about the trends that we're seeing in our data and research, and then I'll hand it over to Kael to talk about the tax implications that everyone should be aware of as we embark on more e-commerce sales. And then we'll follow that with the B2B portion of the session, where we'll talk about business to business commerce trends, again, with an emphasis on e-commerce. And Kael will follow that up with discussions around tax implications for those types of transactions. We'll close out with the Q&A, so I encourage you to drop your questions in the box. And then we also have additional resources for you in case you want to learn more about what we talked about today. So I will get us started by talking about the business to consumer trends and then hand it over to Kael. So as we all know, it's been an incredible year for e-commerce. The first source of data that we're looking at is from Salesforce's Shopping Index. The index tracks the clicks, preferences, purchases of over 1 billion shoppers through the Commerce Cloud platform. And what we saw in the US was pretty astonishing. In 2019, that blue bar, you can see that the average growth during a quarter hovered around 10 to 15%, and that is pretty standard historical average. But in 2020, when the World Health Organization declared COVID as a pandemic, we saw a huge spike in sales. Non-essential retail in the U.S. closed for a period of time, and essential retailers were under capacity restrictions. So people in great numbers turned to e-commerce to make purchases. And then even as stores reopened throughout the year, we still saw growth in e-commerce at an elevated rate. On average, the quarters saw 50 to 90% growth each quarter. So still very, very strong growth for the US as retail opened. And looking at, there was the actual vertical, so what type of products people were buying online, there was a clear trend that products that served the at-home economy outperformed. So the fastest growing vertical was other home products. And then the second one was toys, which makes sense. We were teaching our kids at home, entertaining them at home. So a lot of toy purchases were made online. And the next two, as far as growth rates go, are sporting goods and furniture. Another trend that we saw because of the COVID restrictions in place is that people who didn't necessarily go to the gym as much, and instead turned to outdoor activities. And so they bought sporting goods in greater numbers to take up these sports and enjoy the outdoors. And then furniture, again, I'm sure I'm like most of you. I definitely upgraded my furniture for my bedroom. That bookcase behind me is new and all purchased online. So definitely categories that served people's purposes in this COVID reality did extremely well when it came to digital sales. So that's data revolving around consumer transactions. And now I'm going to shift to a different data source, which is our State of Commerce report. We fielded a survey of business leaders, both in B2C businesses and B2B businesses earlier this year. And the top question for both, and here we're covering it now in B2C, is, where do you plan to make your investments over the next few years? And which ones are the most important for you? And there's a clear trend. When it comes to very important, actually, there's an omni-channel strategy for business leaders. Many are investing in both their physical stores and physical presence, as well as social media. We saw a huge uptick in consumers, spending more time on social media during the pandemic than before. So it makes sense that that's kind of leading the way in the important category when it comes to investment priorities. But not far behind are website and marketplaces. So we're definitely seeing everyone analyze all of the different channels that they could be playing in and investing in. There's a bit of a divergence, though, when we look at the important categories. It definitely shifts more towards the digital channels. So if you had to make a choice, right, everyone's spending more time online and buying more online. Most of these categories are rated as importance, with website, being the most important, with 32% of of executives saying that that's an important category for investment, followed fairly closely by social media. So again, this is the new storefront for discovery and research. Social media is almost taking the place of the store. And then then we have marketplaces, and finally only 16% rate that their physical store and bricks and mortar are going to qualify as important investment areas. So it can be a bit of a divergence once you get into that important category as to what the priorities are for investment. And then speaking about those digital experiences, it's been a huge transformative period for retail. And we asked, how companies adapted the digital experience to really kind of replace that physical experience in many cases due to store closures and capacity constraints. And what we found was that 41% of executives implemented live chat. So again, you'd walk into a store, ask someone questions, discover new products, and you just really couldn't do that last year. And so to replace that experience, companies instituted live chat so they could speak to a human in real time. And then following that, 35% of executives instituted virtual shopping. So again, this adds a video element, consultative sales approach for everyone. So again, trying to replace that physical experience. And then we also saw companies, push the envelope when it came to technology. 33% implemented virtual reality, which is a huge amount of companies doing that. And then closely followed by augmented reality with 32%. So again, you couldn't go into stores really to touch and feel and see things in their real dimensions. And so companies responded by inventing and using technology to replicate that experience. So that concludes the summary of the business to consumer trends that we've seen, particularly around e-commerce. And I'm going to hand it over to Kael to talk about what the tax implications are when we see sort of this rise in e-commerce.
Well, thanks, Michelle. There's some really interesting trends in that and explosive growth. And so e-commerce obviously creates tremendous opportunities for sellers, but it also creates challenges when it comes to tax compliance. And just as if tax isn't handled properly in the shopping cart, then you run the risk of cart abandonment as consumers competitive shop, they price shop. Just as a couple simple examples, some e-commerce companies will set the highest rate in a jurisdiction or state, actually the highest rate in a state, in their shopping cart. Then you run the risk of losing those sales to more competitive prices. Plus, it can be a PR nightmare, which is if that's discovered that consumers are being overcharged tax, or if the rate is too low, then obviously that opens up the seller to tax liabilities and potentially negative audits and fees and so forth. So being aware of those challenges and having a game plan to address them is really what it's all about, and I'll be talking about both. Before I go into it, let me just give a little bit of background around Avalera in case anyone on the webinar is not familiar with who Avalera is. And the net of it is that, that Avalera is about removing the complexity from tax, taking the complex and making it simple. So you have your business and you're trying to grow your business. Maybe you're going through digital transformation. You have a number of systems that tax data and other customer data needs to be consistent across those systems. And then you have the government, and the government has mandatory statutory regulations around tax that they're imposing on your business. And Avalera sits in between the two and helps bridge that gap between your business and the government. And we do that through a cloud software platform, and that has 6 product categories or clouds, including tax calculation, returns and remittance, compliance documents like exemption certificate management solutions and tax withholding documents, fiscal representation for selling globally, and then insights for your business about compliance and about your customers. And we tie that all together through a set of pre-built integrations. So we have integrations to over 1,000 different software companies. A couple hundred of those are e-commerce. We have 7 to the Salesforce ecosystem. And then once again, we combine that with that bridge to the government for an end-to-end tax compliance solution. We've been a proud partner of Salesforce for more than 10 years now. These are the products that we have these pre-built integrations to. So if you're looking for that full tax solution for CRM, CPQ, billing, order management, B2B and B2C commerce, then we can provide that trusted tax solution. So let's get into some of the challenges. And I'd like to start with a monumental piece of legislation that was passed in 2018 that some of you on the call are likely familiar with, but it's worth revisiting because there's context in conversations that we'll have not only in this section in B2C, but coming up in B2B. And that's the Supreme Court ruling of Wayfarer versus South Dakota, which essentially said that rather than businesses being required to register and file simply based on physical presence, instead, that's based on the amount of business that a company does in a state, which has tremendous implications for e-commerce. So let's break that down a little bit. In the beginning, there was physical nexus, and nexus means a connection, and it's used in tax law to describe when a business or entity has a connection with a taxing authority. So prior to South Dakota versus Wayfarer, that connection was usually based on physical property or locations. And there are some caveats there, like there always is. There's some complexity, and we're going to visit that coming up. But essentially, it's based on locations. So in this example, if you're an e-commerce provider and you're based in Atlanta and maybe you had regional offices in Minnesota, Iowa, and Texas, and you're selling online, obviously, that Nexus footprint might be relatively small. So that requirement to register in a state, collect sales tax, and remit taxes and file returns might have been relatively manageable. There were some states that had passed their own economic nexus laws, and they said, look, in a digital age, simply basing tax requirements on where a company is located with all the with all the digital sales doesn't make sense. So if you surpass a certain amount of business in our state, you're expected to register and submit returns. South Dakota was one of those states that had an economic nexus law. They were sued by Wayfarer, the e-tailer, and that went all the way to the Supreme Court, and the Supreme Court ruled in favor of South Dakota. And the ruling stated that For most states, so other states, as we'll see, adopted these laws. But in general, if a seller surpasses $100,000 of sales within a state, and regardless if it's taxable or non-taxable sales, and regardless of whether it's online or through a catalog or a manufacturer's rep, whatever that might be, or if they surpass 200 sales transactions, then it qualifies as Nexus, meaning you need to register in that state and file a tax return and either remit taxes that are collected or make sure that you have exemption certificates, which we'll get into more in the B2B section. This varies a little bit by state. Sometimes it's higher than 100,000 in a few cases. Mostly it's 100,000. Sometimes that's an and statement, so number of sales and number of transactions. Usually it's an or, but obviously that bar came down quite a bit around Nexus. So what does it look like 3 years from now? Well, 3 years from that ruling, almost every state and every state that actually has a sales tax have adopted economic nexus laws. Florida and Missouri were the last two that had to join that group that have sales tax laws. Florida put their economic nexus laws into effect just recently. Missouri just passed those laws, and they'll go into effect in the beginning of 2022. And Alaska, interestingly, does not have a state sales tax, but over 100 municipalities have their own economic nexus laws. So, effectively, they're in that category as well. So now you look at this footprint, it's very different in terms of the requirements for an e-commerce seller. But selling online, is not just about Nexus. There's a number of other challenges that we're going to get into, and it's increasingly challenging when you sell through multiple channels. So there's also a need to make sure that those tax rules and laws and so forth are consistent across channels and across technology platforms. But let's get into a little bit more of some of the challenges. Then we'll get into a couple of ways that automation can help, and then move over to B2B. So 45 states have a sales tax on goods and services, and that represents over 13,000 different jurisdictions. So, and unfortunately, these jurisdictions and the tax rates vary greatly across jurisdictions, and the jurisdictions don't always cross clean lines. So they're not necessarily within zip codes or counties. Louisiana, for instance, has it down to the parish level. Sometimes these rates cross zip codes, so it can be very complex. 47 states have physical nexus laws, and we talked about that briefly, but it's more than just physical property. In some states, and again, it varies, but in some states, having remote employees in a state constitutes physical nexus. In others, holding a trade show or having a board of directors meetings will give you physical nexus within over the next 12 months. 34 states have affiliate nexus laws, which means that having ties to affiliates or businesses in some way in that state may give you that obligation to register and file and either collect tax or provide exemption certificates. 20 states have click-through nexus, which means getting referrals from in-state entities like links on a website might establish nexus for you in these states. 45 and soon to be 46 states, as we mentioned, have economic nexus laws. Again, typically $100,000 or 200 transactions is the threshold there in sales in the state to give you that nexus. 10 states have what are called non-collecting seller use tax laws, which basically means that if you don't have nexus in the state, so you don't collect sales tax, you still may be required to send information to the consumer about that purchase, as well as to state tax authorities, and notify the customers that they then owe a use tax liability to the state, which is what many of us were supposed to be paying kind of all along, when it came to e-commerce sales, but that typically wasn't enforced. Well, in some states, they're enforcing that. And 43 states have marketplace facilitator laws. So we see that marketplaces have grown dramatically as well, but in 43 states, you may be required to collect and remit sales or use tax or provide exemption certificates on behalf of the sellers that sell on your marketplace. There's another interesting law that that passed as part of the American Relief Act, starting in 2022. Sellers, well, let's start with how it used to be. It used to be that if a seller surpassed $20,000 in sales, the marketplace was expected to collect a W-9 form and then provide a 1099 form back to that seller. With the American Relief Act, that threshold was lowered from $20,000 down to $600. So that, for many marketplaces, I'd say probably most marketplaces, that's going to mean a dramatic increase in the number of W-9 forms that are collected and the number of 1099 forms that you need to submit. The other option is that rather than collecting those and providing those forms, the marketplace would be required to set aside 25% of the seller's revenue and as tax withholding. So again, more complexity coming that goes into effect in 2022 for filings in 2023. And then I'm going to touch briefly on drop shipping. This is one of the more complex and harder to understand challenges around compliance. And I'll start by saying that Avalera has many resources to educate yourselves on this because it is a complex topic that we don't have time to get into. But essentially, there are three parties in a typical drop shipping scenario. There's the retailer or e-tailer. So in this case, this is the group selling online, that end consumer that's making the purchase, and then a manufacturer or distributor who's essentially selling to the retailer to make that purchase, but they're shipping those goods directly to the consumer. So whenever you see this scenario, some party is going to be responsible for paying sales tax or use tax, and some party is going to be responsible for collecting an exemption certificate because there's a resale involved. So just if we look at this scenario in a typical B2C scenario, and I'll just walk you through this briefly. So if you use drop shipping, you're an e-commerce company that uses drop shipping. The first question to ask is, does your company have Nexus based on that whole wide range of criteria that we just went over? And then if we look at the top section, the next question to ask is your customer tax exempt? If they're not tax exempt, then you collect sales tax and remit, and that's pretty straightforward. If they are tax exempt, then you need to collect an exemption certificate that proves to the state that you didn't have to charge sales tax. If you don't have Nexus, so then the question to ask is did your supplier deliver $100,000 or more than 200 transactions to the state on your behalf? And so this is effectively saying that that activity of your supplier has now given you Nexus. And then we're back up to the top. Is your customer tax exempt or not, and either charge tax or collect an exemption certificate. If your supplier, so this is the manufacturer in that scenario that you're effectively buying from, if they don't have Nexus in the state, then there's a resale exemption or exemption certificate that you need to fill out for your supplier, because again, you're reselling their goods if they're the ones that have Nexus. And if they don't have Nexus, then the end consumer is expected to pay use tax because no one has charged sales tax on that purchase. So again, recognize that this is complex. I want to just mostly raise this issue as an example of some of those complexities and then pivot to this is a hard thing to handle, obviously, on your own, and this is a place that automation can really help. And that's exactly what Avalera's products are designed for. We're designed to take the complex and make it simple. And I'll give a couple of brief scenarios here. One of them is what we call in the shopping cart the sub-second challenge. And again, I'll hit this very relatively quickly, but the main takeaway is that there's a lot more than just determining a tax rate, or a lot more that goes into a tax rate when it comes to collecting tax or charging tax in an e-commerce scenario. So the way that we look at it is when the customer selects buy, there's a number of steps that have to happen in less than a second. The first one is that we need to validate the correct address. And we need to do that because there's this concept of sourcing rules, origin versus destination, meaning is the rate charged based on where the seller is located, or which is the case in about 10 or 11 states, or where the buyer is located, which is typically the norm. And then based on that information, it's understanding down to the rooftop level, so not a zip code or county or state level, but down to the rooftop level of what that correct rate is. Then it's applying those rates and rules and regulations for the appropriate location, and then determining is that purchase tax exempt, and removing tax if it is. If it's not, then it's understanding product taxability, and so I'll give a simple example of this. In some states, a granola bar, for instance, is taxed as candy and might have a higher tax rate. In other places, it's taxed as health food and might have a lower tax rate, or just taxed as food and not be charged tax at all. And so we looked at those 13,000 different jurisdictions. It's not only that the rates are different, but the taxability of products is also different. So that has to be determined. And then verify whether there's a tax holiday. The state of Florida, for instance, just a couple of weeks ago passed put in a new tax holiday for 10 days around this upcoming 4th of July holiday. So if you don't have automation, then it would be a matter of your business knowing that that law was passed, that there's a 10-day window where consumers in Florida should not be charged sales tax. So your shopping cart has to be updated, and then the shopping cart has to go back to the correct rates once that tax holiday ends. Then all that information needs to be sent back to checkout and then stored for future remittance. So there's a lot there, and that's hard to keep track of. Without automation, it's hard to hard code in, and that's where automation can really help. One more quick example, and then we'll get over to some of the B2B trends, and that's simply that e-commerce opens the door to sell in many geographies and sell globally where otherwise you may not be able to. So there's some challenges there around customs and duties. There's a concept called an HS code, selling globally. And an HS code is the way that products are classified that then determines the duty that should be charged. So, and that's typically down to the SKU level, meaning if you have a t-shirt, for example, the duty is going to vary based on the combination of the color, the size, the material of the shirt, and maybe some other things. So you have to figure out that the correct HS code first, and then there's another concept around delivered duty paid or duty at place. And duty at place is sort of analogous in the U.S. to what used to be cash on delivery, if some of you might remember that. And cash on delivery was that the shipping is paid for when a product is delivered or it's picked up by the customer, kind of at that moment. If duty isn't part of the e-commerce transaction in the shopping cart, then that duty has to be paid again when the customer picks up the good or it's delivered to their residence. And that can be a real shock. It could be hundreds of dollars worth of duties that then aren't paid for, that all of a sudden, the customer owes. That can often lead to returned merchandise and an overall bad customer experience. Then, of course, there's value-added tax, goods and services tax. We talked about U.S. Sales tax calculation. All this can be handled through automation, and Avalera has a solution to do that. So let's pivot. And Michelle, why don't I turn it back over to you? And B2B is obviously, B2C is one part of the equation, but B2B has had some really interesting developments recently as well. So take it away.
Thank you. And yes, I learned so much about the B2C tax code. I also find it very fascinating that it's still evolving, and that marketplace facilitator law is going to be critical as we see more retailers embrace having a marketplace on their properties and more people become marketplace sellers. So that's definitely something to keep an eye out. And now, as Kael said, I'll transition over to what we're seeing in the business-to-business commerce trend. So To kick us off, again, this is from our State of Commerce report fielded earlier this year. And again, we asked, where are you placing your investments? And not surprisingly, the number one area was e-commerce. 65% of executives said for their B2B transactions that they're going to be investing in the e-commerce platform, closely followed by customer self-service online. So there's definitely a move towards digitizing the whole process between businesses and other businesses. And over on the right, you see a stat, which is the reason why that this is happening. 55% of the executives we surveyed said that e-commerce will account for more than 50% of their sales. So they're laying the groundwork and investing now to make sure that that e-commerce experience is great for transactions and then also for service. And as a result, we're seeing a couple of changes within the organization as a result of this sales channel going online. And that is, what's happening to the sales divisions. And surprisingly, actually, people are hiring more sales teams. 61% of our respondents said that they will be increasing the size of their sales teams. And 16% said that they would be decreasing them. So overall, people are still investing in their sales departments and making them bigger, even as e-commerce grows as a channel. And the reason why, which we asked about, is that salespeople are viewed as more strategic. So 63% of the respondents said that the salespeople are trusted advisors, are more strategic. So they're handling the complex B2B relationships, high value, high touch initiatives that need to happen. And then 59% said that they're transitioning some of the salespeople into other departments. So things like marketing are, obviously there's an overlap in skills there, but they're retraining them and putting them in different areas to add value to their organization. And like I mentioned earlier, the second realm of investment is in customer self-service. So the whole service portion of the business when it comes to serving other organizations is changing as well. 57% of respondents said that the customer service teams are more directly involved with e-commerce experiences more than ever. So as you can imagine, even if you're buying online, there's still questions about product availability or maybe the terms and conditions of a contract or where are my shipments. And so the customer service team has had to pivot and learn how to respond to those types of inquiries. And as a result, they're actually being freed up from dealing directly with the customers themselves, whether it's a high value or a high volume or a low volume customer. Instead, all of that is sort of migrating through the online world, and they're being able to service the customers that way. So with that, I'm going to hand it back over to Kael to talk about sort of the tax implications of more and more B2B transactions moving online.
Well, thank you, Michelle. Yeah, it's fascinating trends. And, to some degree, B2B has been really hit with a double whammy. I mean, there was Wayfarer, and we're going to talk about some of the implications of Wayfarer specifically in B2B, but then of course COVID, and disrupting the supply chain, which obviously has accelerated moving online for B2B businesses. And according to McKinsey & Company, as a result of the pandemic, B2B companies are reporting that digital interactions are 2 to 3 times more important than traditional sales channels relative to pre-pandemic times. And manufacturers are looking at a variety of ways to respond to this, online, from traditional e-commerce to B2B portals to marketplaces and so forth. Just another quick trend we're seeing before, related, Michelle, to some of the things that you're talking about, is that this consumerization of B2B. So these business buyers are consumers when they're not at work, and they're expecting to have the same kind of online experience that they do as a consumer. So they're expecting to self-educate. They're expecting to be able to have 24/7 purchasing options, self-service capabilities, the ability to leave product reviews, have chat, and so on. which ultimately is going to have some implications for how tax is handled. And we've already seen, like, I think these are actually pre-pandemic statistics, that 90% of B2B buyers use online search to buy at work. Over half and close to 3/4 of the buying process is completed before the buyer contacts the supplier. So that digital channel is, is really important as an education piece. And then 55% of buyers now make over half of their work purchases online. McKinsey also found that B2B buyers are showing a much stronger preference for self-service, and that suppliers' mobile apps have more than doubled in importance to B2B buyers since 2019. They also found that suppliers that provide an outstanding digital experience are twice as likely to be chosen as a primary supplier than those who provide poor experiences, and 70% more likely than those that provide fair ones. So that whole experience, and again, getting back to the shopping cart and so forth, is really important. We have many companies, when we first engage with them, that are in B2B, and particularly in the supply chain, when we start talking about some of these implications around Wayfarer and compliance, their initial reaction is, well, I don't charge sales tax, so most of my customers are tax exempt, and so some of this doesn't really apply to me. And regarding Wayfarer specifically, it's a misperception in that there really is an impact. I want to kind of cover that. And the impact is really around exemption certificates, or commonly known as resale certificates. And just, as a reminder, if you, as a quick example, if you have an auto parts supplier that sells to a component supplier, that sells to a car manufacturer, to a dealer, and then to an end consumer, there's only one party, in the supply chain that pays sales tax, and that's who ultimately, consumes the ultimate product. So that's pretty straightforward. But there are 3 other transactions further upstream. And if any of these companies have Nexus, then the seller is required to collect a exemption certificate from the buyer, again, showing the state that they did not need to charge sales tax. And keep in mind that one of the first places that an auditor will go when they conduct an audit is looking at exemption certificates and looking at tax exempt sales. So the first place says, show me all the places where you didn't charge tax. All right, do you have the documentation to back up that you should not have charged tax? So now let's revisit this graphic that we looked at earlier in the presentation. Now let's pretend that we're a manufacturer, and let's say this is the old days prior to Wayfarer versus South Dakota. So say you're a manufacturer in Georgia, and you have branch offices in Minnesota, Iowa, and Texas. Based on physical Nexus, that you may have had a pretty small footprint of customers that you needed to kind of worry about Nexus and collecting an exemption certificate and so on. But the world has changed. And again, it's changed with the Wayfarer ruling. And now nearly all states have these economic Nexus rules. So if you're selling then online and you surpass any of those thresholds, and not just economic Nexus, but any of the other myriad of things we talked about, then you need to collect an exemption certificate from that customer, as well as register and file in the state. And so this just sort of summarizes that. If you have Nexus, you've got to register in the state, and you have to either charge sales tax or have an exemption certificate from the customer proving that you didn't have to collect sales tax, and then you have to file a tax return, even if it's a $0 tax return. So the first impact that's had is we've had some of our customers that now have to collect 10 times more certificates than they did in the past. And so having software and being able to automate that whole process of managing certificates becomes really important. But there's also a hidden threat around customer experience. So we have a lot of customers that then once they realize, or prospects before they become customers, that when we have these conversations, they say, well, I'll just collect the certificate the next time that my buyer places an order. But that can create a purchase friction and a bad experience for the buyer, because their order can be delayed, or you're required to charge tax if there's not that documentation that you shouldn't charge tax. And so if you charge tax when in fact they are tax exempt, you just don't have the certificate, then that can lead to a credit and rebill scenario, which is bad for all parties. And then, on your end, if this happens in enough volume, it can actually impact cash flow, create confusion both internally and externally, create dissatisfied customers, poor reviews, and ultimately lost business. Now, how does this tie into e-commerce? Well, everything that we just talked about becomes compounded as a problem or a challenge when you move to selling online. So you've got to be able to take those offline processes and apply them to your online selling. And Avalera handles this through a product that we call CertCapture. It automates the end-to-end management of certificates, including the ability to do campaigns and tell when certificates expire and reach out proactively and automatically to customers and so forth. But in the shopping cart specifically, you can see in this image that tax is listed in the shopping cart, but there's a link that says, "Are you tax exempt?" And if the buyer is tax exempt, they can click on that link. And they can actually select in a matter of minutes the right certificate, get it filled out, digitally sign it, upload it, and you have that certificate. And this can be configured in many different ways. You could do this through a My Account scenario where when someone logs in, they're presented with this information and asked to update their certificate or provide one and so forth. So again, it becomes seamless and you eliminate that purchase friction for the buyer. And finally, I want to just briefly revisit drop shipping, this time from the point of view of the manufacturer. So again, in this scenario, one of these parties needs to pay sales tax or use tax. One of the parties needs to collect an exemption certificate because this is a resale scenario in drop shipping. So in this one, if you're providing drop shipping, so if you're kind of in that manufacturer, distributor, or wholesaler sort of role, then the first question is, does the seller, so does your customer, have Nexus? And if the answer is yes, then it's up to the seller. The seller collects the sales tax, and then you collect an exemption certificate from the seller because they're tax exempt in their purchase from you. It gets a little more complex if they don't have Nexus. So now they don't have Nexus. And then the question is, did your company deliver $100,000 or more than 200 transactions? Or, that's going to be specific to the state, but that's the general, idea to that state on behalf of the seller. Okay, so if the answer is yes, then again, that creates a Nexus scenario where then you need to collect a valid exemption certificate. So that's basically your action basically makes that seller, tips the threshold to like a Nexus scenario for them. If the answer is no, so they don't have Nexus, you don't have Nexus, you didn't surpass a certain number of sales, then the question is, does your company have Nexus? And if the answer is yes, then once again, you need to either collect an exemption certificate or collect sales tax. And if the answer is no, then the consumer is ultimately responsible for paying use tax. Again, it's not the most straightforward thing. We have plenty of resources at Avalara.com to help better understand this, or you can certainly talk to one of our folks that can help out. So just kind of in summary, there's great opportunity that e-commerce has created. But there are challenges not only around COVID, but also around Wayfarer and just compliance overall. So risk and opportunity abound. And then for e-commerce, we help both mitigate that risk, but also, again, take the complex and make it simple, and do that through a variety of products on our cloud platform. So we offer the tax calculation card. Again, we talked about that in the sub-second challenge. We can automate returns and remittance. In fact, last year, Avalera filed 3.1 million returns on behalf of its customers. We talked about tax exempt sales, but the other interesting thing about tax exempt and exemption certificates is that they can be very confusing to the buyer to fill out. And so we have in CertCapture what we refer to as auto validation capabilities. So rather than you having to verify that, did you get the right certificate? Was it filled out properly? I mean, we have customers that tell us that businesses will send them a W-9 form or their business license, thinking that's what they need to be tax exempt. But we use auto validation in our software to help reduce that manual work pretty dramatically. If some of our conversation today has made you think about your product catalog and the fact that your SKUs may be complex and the product taxability might be complex, we have a tax research product to help you understand the specifics around product taxability. We also have a product that automates registrations. So if you think you maybe crossed some Nexus thresholds and you need to register, we can also automate license renewals and just managing a whole wide range of licenses. We talked about the marketplace scenario with a lower threshold for the requirement to collect W-9 forms and issue 1099 forms. We can help with that and automate it. We talked about cross-border and solutions to help you sell abroad, as well as in value-added tax, and then we can handle all those drop shipping scenarios automatically. So with that, Michelle, why don't I bring you back into the conversation and we can take questions.
Definitely. I see Jennifer has been in the chat answering some of the questions. Are there ones you want to pose to Kael? I took a sneak peek, and some of them they're definitely not.
We'll start with they are all Kael questions, and
yes.
Let's see. All right, Kael, we're going to stump you with some tax stuff. Beth wants to know, how does the drop shipping sales tax work if for two related S corps? One sells the product located in Delaware, and the other drop ships the product in Pennsylvania. How is that taxed?
So
and I should preface that we're happy to answer too offline. So
yeah, so this unfortunately gets into some of the specifics. Once we get down to that level, we have to look at things like, is it an origin state or a destination state? And you sort of have to walk through the scenario around, in either one of those scenarios, does a company have Nexus? Do they not have Nexus? And that's where, I mean, honestly, I love the question, because the question seems very straightforward, but it's because of the nuance, not only around tax, but also around Nexus. It's actually, it's not something that I can answer off the top of my head. That said, Beth, why don't we connect you with a resource that can get that question answered specifically, and we probably need some more information from you about some of the specifics around the business and the amount that's being sold and things of that nature.
That's great. Michelle, I'm going to ask you a question. Salesforce, develops, this amazing data set, from your customer base, and you did the survey, and, where can customers go and get that information on a recurring basis?
Yes, the shopping index is on a Tableau public dashboard. So if you just Google Salesforce shopping index Tableau, you'll be able to find that information, and it's updated quarterly. You can also sign up to receive blog posts about Salesforce and our commerce initiatives on salesforce.com, because after every update on that data, we do write about the key trends that we saw from the data on a quarterly basis. So yeah, there's a wealth of information on salesforce.com and then on our Tableau public dashboards.
That's great. All right, Kael, here's another one. Is there any potential for a federal action from Congress to simplify the sales tax processes from state to state?
Yeah, that's been on the table for a long time. We have a VP of Government Affairs, very smart guy named Scott Peterson. There's been a number of I'd say initiatives or actions over the years, to try to streamline. Back in the day, there's a thing called the Streamlined Sales Tax initiative. That's still a real thing. But again, that's the classic example. There's like 26 states that are part of SST, and the rest of the states, wanted to go their own way, and that's the challenge. There's states are reluctant to give up kind of local control and local local say based on, what they perceive as their needs and so forth. So there have been, discussions about that. In fact, there was a big move back in 2015 in something called the Marketplace Fairness Act, which was going to be, it was meant to kind of solve this economic nexus, quote unquote, internet tax. And there were a number of discussions about, a flat tax across all states and, things along that line. But again, it didn't get over the line, and it wound up being that, kind of the local governments prevailed in that, the Supreme Court ruled with the state of South Dakota. And it looked like there was actually, just as a little bit of an aside, there were about 5 other lawsuits lined up behind South Dakota and South Dakota's appeared to be the weakest. I mean, there was conventional wisdom was that the Supreme Court would have ruled in favor of Wayfarer, but then another, suit might have come back up to the Supreme Court. But in fact, again, the Supreme Court ruled with South Dakota. And so I think at this point, it's pretty entrenched that it'll stay at the state and local level. But I'm not an expert. I'm not in government affairs. I can just tell you that kind of what that history looks like. And if history is any guide, it'll stay at that local and state level for some time.
Thank you so much. Well, that's all I see for questions.
Actually, one just popped up. Do you mind if I
missed it. Yeah, can you see it?
Yeah. David says, not so much a tax question, but if integrating a Salesforce B2B storefront with an ERP system, which platform would the Avalera solutions typically run on?
Well, we integrate with over 1,000 different pieces of software, from marketplaces to platforms, to obviously the Salesforce products. And so, we'd have to look at it sort of on a case-by-case basis. But the odds are, again, just all things being equal, there would be pre-built integrations to whatever combination, of cart and ERP you could come up with. And for the ones that aren't, for the kind of the corner cases where we don't have a pre-built connector, we have flexible REST APIs that, allow that integration to be straightforward. Hey, I'll leave one more, and if we have any other questions, please put them in. But, one other thing that might be of interest to the group in the B2B space in particular. So you saw some slides in there by a guy named Brian Beck, who wrote, I think it was like $1 billion B2B. He's really a B2B expert, has a very interesting book. But one of the things that he recommends, if you're in a scenario in B2B where you're embarking on e-commerce for kind of, or you really want to ramp up e-commerce, one of his recommendations is to make sure that you have the right level of expertise internally. And it's kind of a different ball game. I mean, his recommendation is look at someone with really deep B2C commerce, and you may need to bring that people or those people into the organization, because the bar for B2B has raised basically to the level of B2C in terms of those consumer expectations. And it's really common for these B2B companies to kind of think, hey, we have some, smart people internally, we'll put them on it. And that's totally, an intuitive thing to do. But his point is that the level of experience really can make a difference in terms of getting the sort of tech stack and buyer experience that you want. So thought I would share that as food for thought. Maybe put in a little bit of a plug for Brian Beck as well.
Hey, Michelle, I've got one for you now. You had a lot of great data about, the COVID time and post, what's happening post-COVID. But really, from the end of 2020 until now, are there trends that are emerging?
Yeah, definitely. Thanks for the question. So Q1 finished up, and we saw, again, dramatic growth in e-commerce, 45% in Q1. Again, it's a little bit elevated because we're now sort of comping COVID. And what we saw in that quarter was March was a particularly strong month for e-commerce, not necessarily because of safety or non-essential store closures, but because of the stimulus checks. They were announced and dispersed towards the end of March, and that definitely led to a spike of purchases. And I did take a look at we obviously closely monitor what's happening month to month. And for April and May, overall, each month has shown a decline in e-commerce, but only by about 15 to 20%. And as you saw, we were already up 50%, 70% in Q2. So even, we've sort of reset at a much higher level for e-commerce, even as some of the, non-essential closures, are grandfathered in. So generally what we see, and this is the history of e-commerce, right, is that once people adopt it and get used to it, and as Kael was saying, embrace that experience, the frictionlessness of it, they don't go all the way back to their previous shopping habits. So by forcing everyone online, definitely that behavior is sticking, but it's certainly not as high as it was when it was sort of artificially high because of those store closures and safety issues.
That's great. Thank you. All right. Well, I think we're out of time. If you have any other questions, you're welcome to reach out to us. We'll definitely be in touch. We will send out the slides as well as a recording of the webinar. And thank you again. Thank you so much for joining us. And we hope to see you again soon. Thanks so much, Michelle and Kael.
Yeah, thank you, everyone. Thanks, Jen. Thank you, Michelle.